What if I told you that there's no difference on how you should manage your money and how the top 1% manage their money? What if the only difference is the amount of money being managed, but the outcome is or should be the same? What if you can enjoy the exact same outcome that they get by how they manage their money? The top 1% do make more money, but they also manage their money a different way. Make their money work for them. Let's find out two things. What is it that they do differently and how you can do the same? At a smaller scale, starting off, but still, you can also do it and get the same benefits. There's research that suggests that people can achieve the same quality of life as the top 1%, even if they are in a completely different income level. For example, there are people that are making a lot of money, but they are still struggling to break free from the daily grind and actually get ahead. As we see in these reports from CNN, CNBC, and Fortune.com, a high salary does not always translate into a better quality of life. On the other hand, there are more and more people becoming aware of proven tools that allow them to get ahead even on a low salary. So let's talk about those tools. They are proven to be effective and are basically just copied from the top 1% and their behavior. The beauty of these tools is that the benefits can be enjoyed regardless of your income level. It has been proven time and time again that applying these tools will allow you to increase your wealth and get you closer to your financial goals. Now, let's get started with the methods or tools used by the people already at the top 1%, but also being used by the people that are becoming the new top 1%. Before we get started, I'm going to ask you for your feedback and to post your comments in the comments below. I am really trying to figure out how to structure these videos to make them easier to follow and to get better at making them. So thank you in advance. Tool number 1. This tool will give you 100% gain every time you invest. If you are employed and your employer offers a retirement plan, something like a 401k, find out how much they match and make sure you max out your contribution enough to capture the whole match. For example, if they offer up to 3% match, make sure you contribute at least 3%. That is a 100% gain from day one. Basically getting free money for your future you. If they match more, contribute up to whatever they are matching so you can get that free money. If your employer has any Roth options, also evaluate that option if it makes sense for you to invest in those instead. If your employer offers a lower or no match at all, don't worry. There are other options that we will discuss next. The next tool goes hand in hand with tool number 1. Tool number 2 is an IRA. Once you have maxed out your 401k contributions and fully take advantage of the match, aka free money, you need to focus on creating and funding an IRA account. If you qualify for a Roth IRA, I would suggest going for that option, but if not, a traditional IRA account will suffice. An IRA or individual retirement account sounds all fancy and complicated, but you can easily set one up online with many different platforms like Schwab's or even Robinhood. And you could even check with local banks that offer this service. Once you open an IRA account, each year you will be able to put in there up to a certain amount of money. For 2024, that amount is $7,000 if you are under 50 years old. If you are over 50 years old, you can contribute up to $8,000. The great thing about these accounts is that unlike the 401k, you have a lot more control over the investments you make. In my case, I usually split my IRA investments into ETFs or index funds that track a broader part of the market or the whole market. And that way I kind of spread or lower my risk. The investments that I have chosen in the past have been VTI, SEHD, SEHG, and QQQ. But research the ones that you like and make decisions based on your own research, your own situation, and your goals. Tool number 3 will be automation. Sounds fancy, but what I mean is just automate everything. You need to focus on automating everything possible. One thing that most people that get ahead do is that they automate everything when it comes to their finances. You should have your 401k automation already covered, since in most cases, this is usually done before you even get your check. For your IRA investments, you should do the same. I would create a separate checking account, and each time I get paid, I would allocate a portion of my check going into that account to fund my IRA account. My suggestion would be to be as aggressive as possible at the start or the beginning of the year and try to fund my IRA as early as possible. That way, your IRA account is compounding and growing for a longer part of the year. But also, you should automate your expenses. Every expense you have should be automated. This allows for easier tracking of your expenses and also allows you to create a budget much easier, which leads me to tool number 4. Tool number 4 will be a budget, creating an actual budget for your finances. Take some time to review your spending from the previous month and see if there are any areas where you can cut some of the expenses. Remember, fighting against lifestyle inflation, which just means buying more and more stuff without realizing it just because you're making more money, but also questioning every large purchase before you buy it. This will help you stay on track and actually abide by your budget. You need to be tracking your expenses and account for every single dollar you spend. There are many apps and platforms that can help you track your budget, but regular pen and paper work just as good as long as you do it consistently. Now let's talk about tool number 5. Once you have your 401k automated, your IRA contributions maxed out, and your expenses on track thanks to your budget, you need to focus what you do with the leftovers. And this is where tool number 5 comes in. Tool number 5 is about investing and enjoying life. If you open an IRA account with a broker, most likely you also have access to a regular brokering account. So for this tool, my suggestion is this. Whatever you have left over after you cover your 401k, your IRA, and all your expenses, whatever you have left, split that in half and create 2 buckets. Bucket number 1 takes half of that, and this bucket is for investing. Move that half into that investing account. Don't forget to automate this part and invest all the money into that account on a regular basis. Choose your preferred stocks, ETFs, or index funds. Now, for bucket number 2, this is where all your wants and enjoyments go. So things like going out and traveling and all those nice things. Ideally, you will be investing at least 10% of your income. So bucket number 1 will be at least 10% of your income. Therefore, the rest should be for enjoyment. Most likely, if you did everything right, it should be about 10%. But if you're not able to invest at least 10% of your income and you need to make adjustments, I would definitely suggest or recommend that you don't adjust your bucket number 1, which is for your investments. Make sure you stay on target of at least 10% and make adjustments in other areas of your budget. Here are a few tips to help you maximize the effectiveness of these tools. Tip number 1, make sure you pay down high interest debt as fast as possible. Tip number 2, work on building an emergency fund that covers at least 3 months of your expenses from your budget. This covers things like rent, transportation, and food. Tip number 3 will be invest in your career and your skills. Finding ways to improve your earning potential and capabilities will always pay off down the line. And finally, a tip that helps you and helps me. Like and subscribe. See you in the next video, and let's grow together.